All right, welcome everybody. This is John Rothe over at Riverbend Investment Management. Welcome to my big picture weekly market update. This is going to be for the week of September 24th, 2024. So I want to talk a little bit about a potential rotation out of value back into growth that we might be kind of in the early innings for. To start off with, this is a chart, the S&P 500. And you can see we had this very well defined trend that broke down earlier this summer and is now trying to the market's trying to recapture that trend here. And we can see we are starting to break out to all-time new highs in the S&P 500, which is a good sign. We're seeing momentum turn positive here. And as long as we stay above these levels, this is really going to act as our floor for the market right now. That's a good sign. And remember, S&P 500 is very kind of tech heavy weighted, if you will. The index is market capitalization, meaning that it gives the largest weighting to those bigger companies, which right now represent technology sector. So again, the majority of the S&P 500 is made up of technology names, i.e. those growth names. And seeing this start to pop its head out like this is an indication that we might be starting to see some leadership come back into some of those growth names. Now, if we look at the tech heavy triple Qs here, what we see here is not the same pattern, right? We're not breaking out to new all-time highs. We can see technology triple Qs have really been struggling of late, but we are now breaking above that cloud model, which tends to act as support and resistance. And we're starting to see signs of positive momentum coming into play here. So what we're really going to start looking for is to see if this can start to recapture very quickly those previous highs here and start to break out above those levels. And you can see we're not that far away from these levels here. Really just one or two strong days here pushes these levels back up to those previous highs and potentially showing a breakout here. So again, if we start to see that breakout here, that's a really good indication that we're starting to see again, potential really longer term strength within the S&P 500 index itself. And again, starting to see some of these technology and these previous leadership names start to recapture the market and take over as we enter the final quarter of the year here. Now, if we look at S&P 500, the value side of it, again, you can see that very well defined uptrend we've had really since the summer here, right? The value names have really been outperforming and doing well since the summer, but now we're starting to see a potential divergence form here, a bearish divergence here. And what that means is it occurs when you start to see areas of the market start to go to higher and higher, but that momentum is starting to decrease. You're starting to lose momentum on the upside here. And that is potentially a reversal signal for the market. So we might be starting to see the early signs of a reversal here, basically a top forming within the value side of the S&P 500. If we look again at the growth counterpart, we can see we're starting to break out above these kind of intermediate term resistance levels here. And I think we're going to start challenging these previous highs here very quickly. You can see we already have positive momentum forming in on the growth side of the market here. And we're just waiting for this to really start to challenge these previous highs here and break out to these new levels here, indicating that, again, growth is starting to take over versus its value counterpart. Look at semiconductors. This is one I'm keeping a real close eye on because I think this is really going to give us a good indication if the market is really going to follow through on this rotation and we start to see these leadership names come back into play, those leadership names from earlier this year. Semiconductors, again, have done very poorly since midsummer, and they're still down about 15-16% from those previous highs. We're stuck in that cloud model right now. Again, when we're in the cloud itself, it tends to act as I like to say molasses, right? It's a little bit tricky to get, a little bit sticky. It tends to hesitate as we get to these levels. But if we can break above that cloud here, and again, we're starting to see positive momentum come into play here, we could again start to see that these levels start to really quickly challenge these previous highs here in the semiconductor side of the market. But more importantly is I think, again, if we break above these cloud levels here, that is going to be a very good indication, kind of another backup, another indicator that this level is going to start to be challenged very quickly. And we see that continued rotation out of value into these growth names. So again, watch semiconductors very closely because really a couple good days here could be a real indication that, again, the market wants to push toward these growth names and rotate out of value names. But I think semiconductors are going to be that early indication of what's about to happen over the next coming months for the market. Now, if we look at the high beta names within the S&P 500, we can see these levels starting to be challenged here and potentially testing some of these previous highs very quickly. We have positive momentum. We're above those cloud models. We're above this level of kind of resistance for here for at least intermediate. And we're potentially, again, very close to testing these previous highs here, which could, again, give a positive indication that these higher beta names are starting to be favored within the market. We look at the US dollar. US dollar is starting to get weaker and weaker. We're starting to lose some, again, momentum here to the downside, which is a good sign for growth stocks. Typically, the weaker dollar has been a good sign for growth names. So again, if we can see a weaker dollar come into play here, that kind of backs up this whole idea that we potentially see some growth come back. Come back. We start to see some market participants come back into the growth side of the market here. And finally, if we look at our sector rotation graphs, what do we see? These are weekly chart of our sector rotation. If you remember, these tend to rotate in a clockwise fashion here, with this area up here being the strongest and this area here being the weakest. And what are we starting to see here? Well, we saw this trend of value names really leading the market for the last couple of months here, and they're starting to rotate back down, meaning that they're basically starting to get weaker and weaker. And what are we seeing here gaining strength? Growth names, tech names. We're starting to see S&P 500 push higher. So again, that's heavily tech weighted names pushing the S&P 500. Emerging markets, mid-cap growth. So we're starting to see these higher beta, these growth side of the market starting to push and rotate up toward this level here, while these small cap names, while the value names are starting to get weaker and weaker. So again, we're starting to see that early rotation start to come into play here, which is again a good indication that the market participants are starting to look at some of these growth names that really got pushed down since the summer as potential opportunities as we enter the what's historically a strong part of the market as we get into this fourth quarter of the year. So it seems like maybe we're starting to see portfolio managers start to line up their portfolios for this final quarter of the year. Now, let's talk about seasonality. I've talked about this a lot, where historically this time of the year before presidential election tends to be fairly weak for the market. And I wanted to dive in the data a little closer and look into see if there's any outliers here that are really pushing these levels down, or if this is really a trend that is seen on most presidential election years. And what I found is if you remove 2008, where we had that great financial crisis, that pullback in the market, we actually don't have really that bad of a market coming into the elections here. Again, look what we see if we include 2008, right? Just a straight drop from mid-September to October. However, what happens during that same time frame if we remove 2008? We actually get a bit of a slight rise in trend during the month of October, before really that 2-week period before the election, which I think is kind of expected as people take a wait and see approach to see what's going to happen during the election. But again, not the same type of pullback that we saw if we include 2008. So I thought this was kind of interesting to see that the impact that 2008 had on this historical trend, and what happens to the market next. So again, if all these trends come into play here, I think again we have a kind of a potential for that rotation, that continued rotation into the growth names. So something to keep an eye on. Like I said, I'm keeping a close eye on those semiconductor names as kind of a confirmation signal that yes, rotation is continuing to happen within the growth names, and it's an area that we need to really look at closer and closer and look for opportunities within that area of the market. Well, that is it for this week. As always, if you have any questions, please feel free to reach out to me. Best way, as always, is by email at john.rothe@riverbendinvestments.com. You can also check me out on X at John Rothe, or Twitter/X at John Rothe. Thanks so much, everybody. Hope everyone has a great week. Bye-bye for now.